Welcome back. Surviving with 2025 Tax Code. Today we're still referencing IRS Notice 2025 69, guidance for individual taxpayers who received qualified tips or qualified overtime compensation in 2025. Today's module number 3 will be talking about the qualified overtime compensation deduction for 2025. This notice provides guidance to individual taxpayers who are eligible for the federal income tax deduction for qualified overtime compensation added by Public Law 119-21, 139, Statute 72 of the OBBBA, specifically detailed in Section 224. Overtime compensation maximum for 2025 through 2028 as a deduction will be $12,500. We do have phase out limits, which means that at certain income brackets, the deduction diminishes up to a maximum phase out value. And for these deductions, tips and overtime compensation deductions, the phase out is $300,000 for merit filing jointly and $150,000 for all other filing statuses. The implementation included the separation of the regular pay and the overtime pay to be displayed on your end of year information returns, such as your W 2, your 1099. However, even though the deduction is truly valid and it was valid as of any income produced or received after December 31st, 2024, but the implementation hasn't yet been able to be accomplished by most of the reporting companies, the employers. Now, some have, and if they have, we compliment you for that, but most haven't. So, for 2025, you will probably have to collect a few more documents than you normally would, meaning that certain documents that we may can use for 2025 to compute the overtime compensation deduction, we need to document those in other ways than our information machine, information returns. One way, of course, would be your pay stub. Most larger corporations break down wages in regular pay, overtime pay, which is time and a half, or premium pay, which may be holiday pay, which may be double time. So that one is a little bit easier to work with because you would just have to get your pay stub. Now, we've noted in the last week, as we've spoken to clients, that a lot of the accounting and HR departments are actually providing the statement. So, one of the first things that we would want to do is to, if you don't have it on your last pay stub, a breakdown between regular and overtime pay, qualified overtime pay, then you can ask your employer. And we've been very happy to hear from our clients that their departments are providing them this information. They're just going to rerun the computer runs and just separate that out. Now, a lot of us won't have that opportunity. So the things that you can use would, of course, be your pay stub. Some people get an end of year statement in their business, which may have it broken down. And otherwise, we'll just have to kind of figure it out. Now, the way that the states are handling this is different. Now, many states will continue to tax overtime pay, even if it's excluded from federal income tax under the new laws for 2025 through 2028. States actively requiring an add back of federal exempted overtime pay. It must be reported to the following states, and they will add it back in. If you take it out your federal, they will add it back into your state return. And those states are Colorado, Illinois, New York, California, Maine, Delaware, Pennsylvania, and Rhode Island. Now, many other states are directly tied into the federal processing of your tax return. So in essence, they've used the federal as a base, and then they go in and make changes and adjustments based on their state legislation. So these states are currently tied, but they may change depending on whatever their legislation comes up with, because this is all brand new for everyone involved. But the ones that are now directly tied to the state, I mean to the federal, and abide by the federal guidelines would be um, Idaho, Iowa, Michigan, Montana, North Dakota, Oregon, and South Carolina. And the only state that we know so far that they have said that they would be honoring whatever the federal does, um, because they already do it, is the state of Alabama. And they are actually at this time, they provide an exemption for overtime pay. So they may go ahead and extend that. So now what we'll do in our next module, we'll go in and do a couple examples of what you would do if you don't have the overtime pay separated. And that's one of the main issues, is that you may have a week and it includes your overtime pay, but it's a total number. And you have to remember it's going to be different, the deduction, based on whether it's time and a half or whether it's double time. So we'll go through a couple examples in our next module, so you'll be able to figure this deduction, because it does, as we've seen so far, it goes up to 12,500, and it works very well. And we're very happy for our single filers who hardly ever get a deduction for anything, that we're seeing a positive return for them. Many of them, I'm asking them something that I've never asked them before. I'm asking them, may I get your direct deposit information for your refund? And they just get quiet. That you want, yes, you have a refund. Yes, you do. Why? Because you hustled that overtime. And you hustled them tips. And for once, maybe you'll be appreciated by our powers that be, that you play such an intricate part to our economy and to our society, that you deserve a break in your taxes, just like someone with a mortgage or whatever the big guys do up there that don't pay anything on $1 billion of taxes. I'm glad that the code finally, it says thank you for everything that you do for our society. And, here's a little money for you.